A lot of us talk about getting out of the clinic, or doing something on the side, or not always practicing clinical dentistry. So I urge people to take the plunge, right? If there's something you're passionate about, if there's a problem you see, if there's a real solution you have in mind, pursue that. Ask the question.
Hello, everybody, and welcome to the latest episode of the Raving Patients podcast. As you know, I'm your host, Dr. Len Tao, and today's episode, a little different than what I'm used to doing. As many of the listeners and viewers know, I recently sold my dental office to my associate. As of October 1st of 2021, I am no longer the owner of the Pennsylvania Center for Dental Excellence. I moved to Florida in October of 2020. I commuted for a year plus now on a weekly basis to the practice. Decided, and it was in the cards that was never going to be full-time anyway. Finally, October of last year of 2021, my associate and I closed the sale, and I'm now a worker in my own office, I should say. And at the time, I'm 48 years old. I am more liquid than ever before. As someone who has planned very well, I built a great practice. I've invested well. I wanted to know or wondered what to do with some of the extra cash flow or liquid money that I have. I've been in touch with our guest numerous times, and I wanted to bring him on so he can teach you, the listeners, and myself, and anybody else watching and listening a little bit more about what he's involved with. So this episode is called Investing in Oral Tech, and I'm proud to have on Jeremy Krell from Rever Partners. Jeremy, welcome to the Raving Patients podcast.
Len, thank you so much for having me. Really appreciate it. I'll just give a brief background on myself. I'm a general dentist, been so for the better part of the last decade, so I relate to a lot of you out there. I have become more of a dry-fingered general dentist, if you will, in that I have moved outside of the clinical practice for the majority of my current or going forward career and day-to-day life. I do have a few practices in New Jersey and Jersey City with a partner and a bunch of associates, but generally speaking, practice less than a day or two a month. I have spent the majority of my career on kind of the business side of dentistry and as well within the startup world. I have an MBA from Chicago Booth. That's where I went for residency, if you will, and about 18 years in startups. I started in startups before I started in dentistry. Originally, I was in tech startups. And then I went to health tech. So I went to Oscar Health Insurance. I led strategic provider innovations and development there. The company IPO'd about 8 months ago. Oscar was maybe the sixth or so startup that I worked on and had a successful outcome on. And then, ultimately went to Quip. And I came on as sort of the dentist behind Quip and focused on building out the professional side of the organization. The company just raised a $100 million Series B. And then from Quip, I went to work with my Barchester Bay group. It's the sort of management consulting firm for oral health startups. I have about 35 companies under management there, about a dozen and a half of my own investments. So I've worked with some very popular names and held key operating roles at companies like Simplify, Verena Solutions. And then decided, from hearing multiple times from founders, the difficulty that there is in pushing innovation forward due to the hindrances around fundraising in oral tech, started the first VC fund in oral health called Rever Partners. So that's me, and that's what I'm here today to talk about.
So I have a quick question. Obviously, from an investment perspective, or however you want to go over the umbrella term of that, you are well ahead of the curve from the average person. Okay. You obviously went to school. I think you went to Tufts, I think, correct?
For dental school, I went to Tufts.
Yeah, you went to Tufts Dental School. Yeah. So I thought you did. That's where I went too. So you went to Tufts. What got you so involved in this part of dentistry or of outside dentistry in investing? I mean, similar to the extent, people ask me how I got into reviews or how I got into marketing. You took a very different road, and that's why you're a few years younger than I am, but that's why you only work a couple of days a week, if that many, and you're not doing clinical dentistry as much, just like me. And another year or so, I'm not going to be doing clinical dentistry either. We found a way out of the op, as we like to say. And I think when that will register very importantly with these docs listening to this, because I think every doc wishes they didn't have to, spend time in the operatory. Just as a side note, I was at the oral surgery meeting. We talked about the dental implant conference, and I met a Louisville oral surgeon whose father is 84 and still working 3.5 days a week. I mean, look, God bless him that he wants to work. That's the last thing I want to do is be doing dentistry at 84 years old. So I'm just curious what, separately from what we're going to talk about, what got you so involved in this type of stuff at such a young age?
I'll go back and I'll tell you where it all started, but just commenting on something you said there. There are a lot of, really diehard clinicians, and you got to do what you love, right? My dad's an orthopedic surgeon. I think he'll work till he's 100 if he lives that, God willing, lives that long. And there isn't a world I can see him kind of sitting still. So there are those people out there, and we totally respect it. Yeah, I took a different path. So, it kind of just came from an itch. Early on, I wanted to understand what a startup was. I started a web and graphic design company I'm neither a web nor graphic designer, but I had a best friend that was. We spun out 2 companies from that after doing a deal with the Rachel Ray Show and one with Models. And it felt good, right? There was an itch. I scratched it, and it felt good to scratch it. Right. And so, from there, I went to a luxury good and commodity service targeting college students. So laundry pickup and delivery, room cleaning, appliance rental, PC backup. Joined the early team there. We scaled it for 4 years, sold it right before the 2008 market crash. Did well, and it felt good to get in. And, that struck a luck right before the market went down, and it just felt good again. Right. So then I started an incubator in Boston, scaled it to New York, Chicago, San Francisco, kind of industry agnostic, but helping startups with lean startup methodology, kind of how do you recruit and retain talent with almost no resources on hand? How do you find funding and bring it on we weren't a fund? And then providing a bunch of services that otherwise are too expensive or cause the startup difficulty in getting off the ground. And that went well. I only stepped down to sit on the board there because I accepted the role at Oscar. Right. So it just was this snowball effect of, itch pops up, scratch it. Itch spreads and gets bigger, scratch it more. Right. Feels better. It's kind of the way, in a way, it's sort of how poison ivy spreads. Right. And that's kind of the effect that happened to me.
Gotcha. That makes sense now. Okay. Thank you for explaining that to me. I always wondered, I'd never asked you. So, all right. So let's get to what I call the meat and potatoes, or the content of the podcast. So what do you feel are current barriers to investing in oral health?
Yeah, I think the biggest barrier that I can think of, there's a couple barriers, right? So I think one of them is data, right? So if you go in the investment world, in the business world, if you're looking at tech or, fintech or edutech, things outside of dentistry or even healthcare entirely, the first place people go is to PitchBook, right? Big company, it's an expensive license, but you probably have a friend that has one. And you go in there and you pull performance data, right? How did this start up? And you can filter by lots and lots and lots of different criteria. Maybe even before PitchBook, you've gone to Crunchbase or some of these online platforms that track some of the performance. And you look, if I put my money in now, how much do I think I'm going to get? And how long is that going to take, right? Very simple, kind of questions to understand the venture or the startup space. The issue in dentistry is that data is simply not centralized. So actually, this started about 18 to 20 months before we launched Rever Partners. We publicly announced it in January of 21. So we went for about 18 to 20 months in stealth mode. And part of that stealth mode time was doing this research. Right. We ultimately derived a database of over 600 companies now with over 1,200 transactions in it. We have infrastructure built on top of that to query it. We've published on it. We provide some of that information back to the industry as insights and some to our partners and investors. And we also use it to benchmark against startups. But that data is critical, right? And what we kind of came out with is there's a 33 to 35% IRR in this space. On average, it's about 4.8 years to get to about a 5.2x. And our own partners do it in about 4.1 years to about the same return. So, getting that kind of performance data, and then we can filter it down by different type of companies, software or biotech or consumer good, right? And they all perform very differently, right? Where you have software companies that take more like 3 to 4 or 5 years, right? Then you have a consumer product that's more 4 to 6. And then you have, medical device or therapeutic 7 to 10. So they're grossly different, but you need to understand if they're going to raise a second round or if they're going to IPO, how long does that take to get to what value. And so that was really the first bit, was coming up with this data. We knew that we would need it to convince both external investors to the dental industry, as well as even the evangelists kind of within the space, right? Because it's just simply not known. And even what is known is not talked about. So I think that was step one. I think the other step, Len, is what you and I were talking about before, which is we invest in what we know, right? Or we invest in what we think we know, or we invest in what other people we trust know, right? Are kind of the continuations of that. So what do I mean? We invest in our dental practices. That's us doing the work, right? Us leading the business. You're not going to invest in yourself. There's certainly nowhere else you're going to put your money. Right. So that's number one. And then we go and invest in, real estate, because maybe we bought our practice, or we bought our home, or we bought a second home. Right. And then we go and invest in our 401k and our life insurance. Right. And then we start investing in things that our CPAs and our financial advisors tell us to, the S&P, maybe crypto, right? If for those that are really risk seeking, if you will, right? And so what ends up happening is, people who are somewhat affluent, professionals, or in our world, angel investors or high net worth individuals, they are invested in things they don't know anything about. They are invested in things that are relatively risky, even more risky from a return profile than startups. And they skip over things that they actually know, but just didn't have a means to do. And so, I think, word to the wise, when you're talking to your financial advisors, CPAs, they're programmed specifically, sort of not to talk about venture capital or to make advice, really understand this segment. And I'd ask those questions. But that last piece is kind of the third reason, which is there wasn't a means. But Rever is the first independent VC fund. There was simply not a platform, right? So you were stuck as an angel investor if you really wanted to, as a dentist, or, so invest in the technology, what we're calling oral tech, right? Everything inside of the four walls of your practice, from the software to the biotech to the consumer products to the pay tech, all the stuff that lives inside of your practice. Your options were to do it as an individual. But that's a problem, because that means you have to source deals, right? Everybody likes the comparison shop. So if you think AI is cool, well, now you got to go talk to 4 to 6 AI companies, right? And figure out who's the leader, who's going to win, what are the valuations, right? The second bit is not just sourcing them, but the diligence, right? You got to go really deep. And if you're going to spend your money on something, and figure out, is this the product that's going to win? What does the team look like? What's the market opportunity? What shape is the product in? Right. And then you've ultimately got to invest, and you got to manage that investment. There's taxes that come off of that. There's, reporting requirements, all kinds of other things. These are all major hindrances. Right. And so Rever sort of stepped in to solve these problems, right? We have a pipeline of over 250 companies. I'd say by far the biggest startup pipeline that I've heard of in oral health. We have a 70+ person team to do the diligence from leaders across the dental industry. And we have a really sleek, simple platform for accredited investors that makes both making the investment as well as managing the investment super easy.
Gotcha. That makes a lot of sense. So, I think one of the things that you and I had talked about, and you mentioned it a little bit, was kind of like, why does somebody want to invest in, and this is not on your speaking points, it's a question that I just have, is why does someone want to diversify their portfolio to include something like that you have? Why does someone say, okay, I'm going to take a portion of my liquid money and say, let me give it to Jeremy and his team to invest in these oral health companies? And you had said, and I don't remember the specifics, but you said some of them, pay off in 3 to 5 years. I know you said that the equipment companies are 7 to 10 years. Some of them are 5 to 7 years. So for people who are listening to this and they say, well, I have $100,000, I want to invest. Talk about that process.
Yeah. So let me approach this from a couple different ways. So diversification is key, right, in your portfolio and within the investment classes too. Right. So you want to invest in one type of real estate, but if you're going to invest in real estate, probably multiple types of real estate. Right. And part of the, main theory behind that is because nothing's bulletproof, right, at the end of the day. Now, dentistry, as we've seen through recession and through, natural disaster and through market crash, it's somewhat insulated, right? In other words, at the end of the day, we're definitely still in a place, in terms of science and technology, that people still need the dentist. In fact, they way underutilize the dentist, right? There's always kind of a place right now for the dentist, and I don't really see that changing. So it's a pretty insulated. To say it's, maybe it's resistant is another good word. To say it's bulletproof, not too far, right? But, having diversification, I think, is is really key. So if you're just invested in your dental practice, but something happens to that market, right? Something good or something bad, it's going to be short-lived, right? And so you want to have other investments in the space to make sure that you can really capture the full value that there is, right? Rather than leave money on the table. So that I think is really important. The process is fairly simple. So Revere Partners has works with AngelList. We're an AngelList rolling fund, and essentially we have this model, the rolling fund, that accredits all investors. So you go through a fairly simple process to make sure that you are accredited. For those listeners who don't know what that means, is either if you're filing solely that you've made $200,000 or more in your last two tax filings, or if you're filing jointly over $300,000 a year for your last two filings, or your net worth is $1 million or above, right? So while everybody may not pass this threshold, I would say the vast majority, of the professional side of the dental industry do pass this threshold. And that's really important for Revere because it affords us a couple of strategic advantages that I can talk about a bit later. So once you go through that process, the really only hard minimum that there are the number of quarters. So we have this really unique model, the rolling fund, which is really a subscription service for investing. Now, what I mean by a subscription service for investing is you commit to a certain amount on a quarterly basis. The advantage there is instead of private equity or some other venture capital, traditional venture capital models, you don't have to put in a big amount up front. You can stay liquid over time and subscribe, right? It just draws down on a quarterly basis. And what that enables us to do is diversify you way more. We invest in 3 to 5 oral tech companies per quarter. And so over the course of each quarter and over the course of each year that you're invested with us, you become more and more diversified and the benefits become richer and richer. In addition, right, it allows us, the general partners, to better be able to manage supply and demand. We don't face perverse incentives of having to invest a certain amount of money by a certain date and therefore, making hasty deals. We can even roll money over to the following quarter, giving the previous quarter's investors their pro rata share of the next quarter's investments, right? So no perverse incentives here, which is great. We stay open. So investors are coming in more and more each quarter as we continue to grow and establish our place in this industry. And so that's really important. We're able to market the fund, right? Almost every single venture capital fund cannot, but we are a 506c fund. So we can actually market ourselves. We're one of only very few to be able to do that. And last but not least, we have the ability to have, any amount of AUM, assets under management, raised within the fund and invested from the fund without having to file an IRA, basically as a registered agent with the SEC. And that's due to our structure as well. We do all the valuation, legal, tax, compliance reporting through AngelList. So everything is in a sleek and simple dashboard for you to manage, right? So we've created a pathway to leverage the deal sourcing and the diligence that we do and to invest your money wisely for you. We also have we're sort of a hybrid, right? So in other words, on deals that there's excess allocation. So if a company is raising $10 million and they give Revere a $2 million allocation and Revere writes a $1 million check, so we have an extra $1 million, we turn back to our LPs, to our investors, and say, who wants to invest more? So there are deals where you can make your own decision to put more capital in, right? So let me kind of stop with some of those details and kind of just end with painting kind of the vision. I envision as a dentist, right, this practice or future practice model where the dentist doesn't just own the practice, but they own a piece of everything in the practice that they're using. Right. I think we're very good at pointing out things we don't like. We're okay at creating or coming up with solutions. We are not great about commercializing those solutions ourselves. And the other things that are challenging in a dental office, right, are, think about it, retention, right? If you haven't heard, staffing is really hard and really expensive right now. Another thing is change management. I've seen a lot of good technologies present themselves to a dental office. It makes the office money. It saves the office money. Its features are better. But the office says, you know what? It's just so difficult to get our staff trained on something, or it's going to be so painful to move over everything from this platform to that platform. Forget it. It's not worth it. But it becomes worth it. And maybe your staff becomes more sticky or committed, highly retained to the practice if they also own a piece of all the things that they use, not just the practice itself. So whether you're a solo practitioner or you have a big practice with multiple docs or you have multiple locations and you're scaling up to grow a large organization, think about the ownership of not just the practice, but everything in it.
Makes a whole lot of sense. One thing I appreciate is you're certainly an expert in your space, and not that I don't talk to other experts in your space, but you rattle that stuff off like it's nothing, and I appreciate that. So,
well, I've said it a lot of times.
no, and I get that. It's the same way I am with what I talk about, but I appreciate that when I talk to people that they just know what they're talking about. So,
yeah, we have to continue to say it over and over again, and it takes a bunch of times, but we really want the industry to, to latch onto it and understand it's by doctors for doctors, it's by the industry for the industry, right?
100% so. So, we were talking about some oral technology. Let's talk about some trends and what you see coming. Obviously, and to be very, I guess, transparent, I am not an investor yet, but I am an advisor to Rever Partners. I've done some due diligence on some of the companies that you have brought, to the table. So what are trends that you see? What's coming out? What are your thoughts on that perspective?
Yeah, so a great question. We see 6 large areas, and underneath them, there are a lot of different sub buckets. And I also think we actually have a blog article coming out on our website, reverpartnersvc.com. I think that we have within our resources center a blog that's like a countdown on the year and what those big trends are, like 10 down to 1. So be sure to check that out. But the 6 big areas that we really see are, 1, software, right? Includes think AI, right? Think digitizing the supply chain. I think the second one is really this area of biotech, everything from 3D printers to the microbiome space, right? The third big area, consumer products, think upmarket premium products like Quip or in-a-box solutions. And then there's, the pay tech or fintech in this space, right? Think about what Simplify is doing with payments or other payment processors or revenue cycle management solutions out there. Then there's this area of prevention or access to care. And there's a lot of different devices and platforms out there that do that. And then I think that, the last is sort of oral systemic health links, these areas that kind of push the bounds with the medical, or total health, body wellness sectors. And kind of bring the mouth and oral care closer to primary care. So these are kind of the big areas, super big trends within them that we've seen. One that I mentioned before is microbiome, right? This idea of, certain companies helping the average consumer or patient to understand what is going on in your mouth, right? There's this complicated, hundreds of bacterial species doing different things, right? Quantify it. Actually take a saliva sample, tell us who's in there, who are the bad actors, who are the good actors, and then lastly, treat it, right? And when I say treat it, I don't mean brush your teeth 2 minutes twice a day or floss once a day. We know all that, right? Consumers have heard all that. But actual therapeutics that can be directed at the real problems in your mouth, personalized medicine, or even just the bad players in general, if they happen to be in your mouth, right? So that's one kind of space as a platform that's really, really growing and developing. I think it's no surprise to anybody on this call that I'd also say ortho. Obviously, aligners have been a tremendous hit. They're a huge amount of movement, both on the consumer side, as well as on the industry side, as well as on the professional side, around a variety of different models. What I'm excited with there are the ability to actually bring the orthodontist, or even let's broaden it beyond orthodontics, models that are bringing the specialist closer in the loop with the general dentist who's doing some more and more of these procedures, right? And I think there are a number of platforms out there from very different perspectives, from purely educational to actually, focused on devices, all the way down to physically working, or virtually working together. Many different platforms out there doing it, but there's lots of platforms that are bringing the two together. Last but not least, and just to bring up another one, I think it's no surprise that AI in dentistry is an enormous focus, where everybody's waiting on the FDA approval for diagnostics or diagnostic assistance, which is expected in the first half of next year. I think we can all agree that dentists don't agree with themselves or with each other, and the data it clearly shows that. We are busy at work and practice. It is hard to look very closely at those images. The images aren't always the greatest quality, and so it becomes a challenge, and we're both leaving healthcare opportunities for our patients on the table, and we're leaving revenue on the table. And so some of those solutions, are out there to do it. And there's many, many, many more in different areas of dentistry that I think are super exciting, but those are just some of them.
Hey, like I said, you said it best. I really don't have anything to say other than that. That was really well done. So I think as someone who has been talking to you about potentially investing some money, one of the things that, I've been asked by my advisors was, talk about performance, talk about, because obviously you invest in the market, you invest in your 401k, there's certain performances you expect to get. So talk about the performances of what you see. Obviously your fund is new or newer, so you don't have the long-term studies on that, but you're based it on previous research, I'm assuming. So talk about what the research shows, performance against other avenues that you can be investing your money in.
Yeah, 100%. And so you have to, in these cases, you really have to base it on, the partner's track records, right? So we have an admin team, a venture partner team, and an associate team. And so you take a look at the partner track records and what they've done. So I've mentioned, an IPO, some very successful raises, just here on the call. And then we're fortunate to have done the research, right? And to be able to show that 33 to 35%, internal rate of return, as well as that, for roughly 4 to 5 years to get to a 5.2x. So those are really the critical numbers if you're looking for them. What's really interesting are some of the findings from our research as well, which I'll add in here. So, one question we asked ourselves was, what percentage of all, venture capital deals are healthcare, over a span of years, and healthcare inclusive of oral health, and is it increasing? And the answer is that it's about 8% of all VC deals are in healthcare, and it is increasing. It just depends on the years, right? It's been a little stagnant, say 2016 to 2018, 19, and then things get weird in 2020, 21. But it's been increasing, but very slowly, and it's about 8%. So I think that's interesting. Another, interesting question is, how well invested in is oral health as an industry compared to, and I took the healthcare industry and broke it down and broke 3 pieces out of it, right? Medical devices, healthcare services, healthcare software. It turns out, and we have a nice graph that shows this, oral health is way underinvested in than, say, even just medical devices on its own. I'm not even saying medical devices are properly invested in, right? They are multiple fold more invested in than the entire oral tech industry, right? I'm not counting practices. Again, I'm talking about oral tech. That is alarming, right? We are way underinvesting in it. We have a definitely a restricted capital flow to the venture side, right? Hence the formation of Rever. And then maybe the last kind of interesting question that that we researched and is worth kind of raising here is, if I've got $1 and I'm going to put it on some dental investment, we all know we invest in our practice, so that was one of them. But another area was, what about public securities, right? So name any of the public companies in dentistry, Colgate, Shine, not calling out anybody's specifically, but just as an example, those are public companies, right? And then we also compare it against private equity. Now, private equity has really kind of 2 flavors. Private equity that purchases late stage products from the VC, grown-ups from the VC world, or it can purchase practices, right? And so what we see is, even on a risk-adjusted basis, right, dental VC outperforms all of those investments that I just spoke about. The public equities are the most subject to fluctuation. Private equity, its practice acquisition model is the highest right now, and then the single practice is a little bit lower than private equity, right? And so even on a risk-adjusted basis, this is a good investment. And the kicker is, almost nobody else is doing it, right? And just private equity's practice acquisition models, about 80 PE firms that compete over that. So these were some of the findings from the research, as well as the performance on these investments that I mentioned before, that really kind of lead to, hey, I should be looking, if I'm going to invest in my practice, if I'm going to invest in things I don't know about, or things that are as risky, and if not more risky, and some things that are less risky, I should for sure be looking at oral tech, right? So that's kind of the main point I want to get across. This stuff has a place in any kind of well-manicured run portfolio.
Okay. All right. So you mentioned during this topic we just talked about how important the team was to you. So talk about your team, talk about how it matters. You alluded to it a little bit during this section you were just talking about. So I know you have a lot of people involved, a lot of advisors, a lot of, people who are investors. So talk about everybody that's involved with the fund itself.
Yeah, we've been really fortunate to have excellent people. And if any startup is successful on one major metric, it's their human capital, right? That's really, at the end of the day, what you're investing in. So the way our team is structured, about 70 people, is we have an admin team. In there, we have 2 general partners, myself and one other. He's also our CFO. We have 2 directors of marketing and operations. We have 2 C-levels. One of them is a chief science officer. The other is a chief innovation officer, and 1 strategic partner. So that's kind of our admin core, and we'll be adding to it a software developer as well as somebody in human success people as well. Then we have a venture partner tier, and there's 7 venture partners in there. Inclusive of folks from the business world, folks from the startup world, folks from the marketing world, folks from the clinical world. So some of those names include Dr. Ed Zuckerberg, who's been a great friend of mine, an amazing asset to Rever, as well as so many more. Jane Levy, Dr. Kathy O'Loughlin, and so many others in that space. And then we have a wonderful team of associates, about 45, 50 now, who are from all facets of dentistry. So from the big manufacturers, distributors, DSOs, insurers, they're from the academic institutions, professional associations, the labs, the retailers, you name it. The team as a whole is helping with kind of one of 5 things, right? Or some combination of 5 things, depending on the individual, because we have many multi-talented people on the team. So one of those things is sourcing investors, then sourcing deals, diligencing those deals, supporting those deals post-investment, and then ultimately the fund's operations. And so our team greatly helps us. Our diligence process is deep. We have an intro component to it. There's a pitch. There's follow-up to that pitch, as well as a deep second round of diligence. There's an internal scoring mechanism. There's an internal presentation mechanism. All of that precedes an investment decision, right? So things are being highly scrutinized here by many leaders from around dentistry, right? If you asked, another VC fund who made or is thinking about making an investment in oral health, one of a couple of things has happened. They've done no diligence whatsoever and trusted somebody else. That's a poor move. A second is they've asked Rever, but we're new, right? And so we are helping other investors come into rounds, but haven't been doing it for those that have done it years back. And the third way is they're calling on their local dentist, right? They're calling on all of you, which, I applaud them for really asking the clinician their opinion, but that is not sufficient to evaluate, the performance of a particular investment target. They just have no idea who to go to, right? And so we have the ability to sit around one particular startup, 4, 5, 6 different people, the technologist, the scientist, the distribution expert, the clinician, right? Whoever it is who needs to be a part of that decision, they are all a part of that decision when Rever makes a move to invest. And so that's a key bit. The only thing I'll spend a little bit more time on is maybe, that element of support, right? When you make an investment, now what? You're going to connect it as an individual. You're going to advise it on your own. Sure. Right. Those are all great things and useful to the startup. You sit on a clinical advisory board, you test their thing in your practice, provide feedback, all useful, all helpful. And I applaud those that are the early adopters of technology out there. But these startups need a lot more help than that to perform. Right? They need, for example, there's a key risk area around the people, right? So we have a huge recruitment engine plugged into Rever that can help them find the people that they need, right? If they're trying to sell into DSOs, they need a VP of sales who knows the DSO leaders, right? And there's a huge area around pilots, right? If they're going to go into DSOs, we've got several dozen DSOs with structured pilots. Right? If they have a regulatory process they need to go to, we have regulatory partners, experts, attorneys, and infrastructure built on that to help them walk through the process and do it more cost effectively and up to 50% quicker. Right? If they have a physical product, but we need to get the design slimmer, it needs to meet consumer demands, it needs to meet manufacturing demands. We have industrial design team that sits on top of that. If they can't afford a clinical study, which take 2-3 years and 150, 200 grand, but so they're in the process of doing it, but don't have it now, right? We have ways to clinically evaluate them through our platforms and then market it out to a leader, a group of KOLs with a vote of confidence on it, right? So there are a number of structured partnerships that we have to support those startups, right? And ultimately de-risk your investment, right? The investors, the LPs that invest through us.
Gotcha. That makes a lot of sense. And thank you for explaining. I think the last thing we wanted to talk about before we kind of do our wrap and finish up with things is, and I think it's a question that's important or a topic that's important because I'm not sure everybody understands it. How does VC actually work?
Yeah. So VC, is simply, the way you can think of it is you are entrusting your money in the hands of the general partners to invest wisely on your behalf, right? That's really the venture capital model. What's happening is, or at least in Revere, is there's an amount in our fund quarterly. We look for the top, say 3 to 5 companies is our intention, and we invest it into those. What's happening is you then, as the investor, get your pro rata share, right? So if Len and I are the 2 investors in a quarter, and we've each invested $100,000, and that $100,000 gets invested, the $200,000 total gets invested into a company, Len and I each get half, right, of the allocation that Revere has made, right? And then there's a fee structure. Very and most common with venture capital funds is what's called the 2 and 20. It's a management fee, which comes off the top, and then a carried interest, right? Splitting the profits later. If I invest $100,000, we take, in our example, 2% of that off, right? And it's usually amortized out over, say, 10 years, right? Something that the fund is going to actually maybe manage that money out over conservatively. If that fund ultimately returns me, the investor, at $100,000, $500,000. So there's a 400, I get my money back, and there's a $400,000 profit. You split that 80-20 with the fund, right? So the fund, ends up taking $80,000, and you would then take an additional $320,000 on top of your $100,000 that you got paid back, right? So that is the typical way that it works. There is no set timeline, right? You essentially get paid out when the companies that you invest in return, right? When they're bought, when they're merged with, when they IPO, or when another investor buys you out, whatever it might be, the investors of the fund get paid back when each venture starts to have a major financial event or transaction at the end. And so that's what we all wait for. That's why also it's important to be in it for at least a year, at least say those 10 to 12 or so investments, because you get diversified and you're likely to find some real winners within that crowd. And you asked a question earlier, Len, why diversify? Why some that return early? Why some that retain later? Like, why wouldn't you just go for all software in dentistry if it returns in 3 to 5 years versus take a look at medical devices and therapeutics with all their cost around regulatory? Well, here's the deal, right? Software returns, and it can return big multiples, right? But typically its benefit is it returns some multiple quicker. The benefit of the medical device or therapeutic is it definitely takes a lot longer, but it returns many multiples bigger, right? If it's think of the groundbreaking therapeutics or devices that are out in the healthcare world today. Those are major jackpot winners, right? If they truly are groundbreaking. So you've got a balance between time to return and average return multiple. So that's what we do within our portfolio.
So before we get to the other parts of the finalizing the podcast, is there anything else you want to make sure the listeners and viewers hear or get out of the content that we provided them with?
No, I urge people, I know a lot of us talk about getting out of the clinic, or doing something on the side, or not always practicing clinical dentistry. So I urge people to take the plunge, right? If there's something you're passionate about, if there's a problem you see, if there's a real solution you have in mind, pursue that. Ask the question, what does it take to get to a prototype, right? Who might be able to fund me? Who could partner with me and help me on this, right? Rather than tuck it away and, come back to it later or wait for somebody else to come up with it. I would encourage people what I did long ago, which is just scratch the itch, right? It doesn't always have to develop and completely change your career, but it could be a part of what you're doing. And, you might find some real benefit to that and some real enjoyment. And I'm a big fan of balance not only in your portfolio, but balance in life. And so I think I would just encourage people, reach out. If you have any questions, of course, for Revere, do so. And of course, for any of the podcast listeners, we offer a one-time discounted rate to invest. And you just simply have to reach out to us at reverepartnersvc.com. We have forms on our website. You can reach me at jeremy@reverepartnersvc.com, and we use code TAU, TAU123.
Okay, awesome. So I know we have just a couple minutes left. I want to get through some of these questions from the pod decks. We're going to use one that's that we call the hustle. which is based on some business stuff. Jeremy is on the business side of things. So let's ask these questions there. So what's one skill or trait do you feel is imperative for you to be successful?
Curiosity. You absolutely have to look at what is it that you're not seeing and turn around, look around that corner, shine the light around that corner to the part you're not seeing.
Perfect. What's the most common reason for people failing or giving up?
The most common reason for failure or giving up, I personally think is, simply failure to create something to a real need, right? To really not solve a problem. If you're going to create a solution, it has got to be to some real pain point that's out there that you have designed to, rather than create some thing that you think personally is the best thing, since sliced bread, but it doesn't fit. There's no product market fit.
Perfect. If you had the chance to start your career over again, what would you do differently?
I get hit with this question all the time. For kicks, I think I would have considered being a veterinary dentist. What a great gig. There's no insurance to deal with. Patients
don't complain, and they don't complain.
Anything to help their dog. There's so much need out there. You could dominate a territory. I think I should be a veterinary dentist in a different life.
That's smart. How do you capture and keep track of ideas? Do you keep a notebook? Do you use voice memos?
Yeah, I'm constantly coming up with ideas, and at the most inopportune times, when I've got my kids in my hand, when I'm in the shower, when I'm asleep. I definitely have a constant running email draft or note open on my iPhone, and I sit there and type them out. I wake up at weird times in the night and scribble things down all the time.
Okay. What about the future are you most excited about?
Ooh, that's a good question. I'm really excited to see what does the future of the next even 2 to 5 years look like in dentistry. There is so much changing right now. The way that the practice consolidation push that's going on, some of the really neat stuff that's coming out from AI to robotics, some of the spaces that have 5, 6, 7, 8 competitors. I think this entire landscape of dentistry is going to look completely different in the next 2 to 5 years. It's going to be a very short time frame, I think, to some very big changes. I'm really intrigued to see what the rules of the road are in just a couple of years from now.
Perfect. Describe Mondays for you in one word.
Manic. It's got to be manic Mondays. It's crazy. We've got people who have clearly held their email from a day or 2 or 3 over the weekend and kind of burst it out, all on Monday. And so it's a day of, often back-to-back meetings or calls followed by a blizzard of emails. It's a completely manic day.
Okay. Last question. If you were to write a book about yourself, what would it be titled?
Ooh, that's a really tough one. I think I'd have to go with either Man of Mystery or The Dark Side, right? And both kind of alluding to the same thing, which is, and it hasn't always been easy taking this risk. Dental school is expensive if you haven't heard, right? I'm taking on every day, $1 million, $1.5 million, and that's not counting my home or anything else, right? Just an education of debt risk, right? And when you've got kids and family, that's scary, right? So, and you don't know if it's going to pay out. I think it's, just going down that road less traveled, coming over every obstacle. Do you think my parents didn't, have a strong set of words with me when, I'd worked so hard to go to dental school? I've taken so much money out in loans and, then decided to do something other than clinically practice. What about the school itself? Do you think it was originally adopting of that? I'll tell you, it wasn't. You've really got to have belief in that other side to get there. I just hope it's easier for other people. And if my story, I know all stories are kind of unique, but if my story can help other people get there, then I'm all for it.
Well, that was awesome. You added so much value to that. Thank you so much. Guys, I know Jeremy has to go. So Jeremy, thank you so much for joining me today. I really appreciate it. Guys, if you like this episode, please share it, like us, subscribe to it. Check us out. Fridays at 1 p.m. The new episodes come out. And as we close this episode, Jeremy, thank you again. Remember, your reputation matters. Until the next episode, thanks very much for listening and have a great day.